We're live now.
Few seconds. I was running from a meeting to this.
You're a busy man.
It was a government meeting, so I couldn't apologize.
Okay.
Hi, good afternoon, everyone.
Yes, hi.
Good afternoon. Great, great. Okay, we can make a start if we have Faisal on camera. Fantastic. And we will get a start. Faisal, are you able to join us on camera? Okay, we're about to start now. We'll just get Faisal back, hopefully.
Yes, we can start now.
And I don't see Faisal.
Yeah, because he's logged out and he's logging back in.
Okay, well, I'd like
Maybe we can wait for him, but we can start.
We can't start without him, so I'll just wait a minute. Sorry, gentlemen, we'll wait for Faisal another minute or so. There we go. There we go. Okay, fantastic. Fantastic. Right. Good afternoon, everyone. I'd like to welcome you all to the Mashreq Sustainability Dialogues webinar hosted by Mashreq. I'm delighted to welcome all our speakers today and our host, Faisal Al-Shimari, Executive VP, Head of ESG and Corporate Strategy at Mashreq Bank. And we are here to discuss today how the public-private partnership model can effectively be leveraged to mitigate risks and facilitate better access to sustainable finance, which of course PPPs play a crucial role already in driving sustainable finance solution towards sort of economic growth targets, but all while trying to keep the ESG metrics and challenges also in place. And there are many challenges obviously to that. And I'm delighted to be joined by a panel of speakers today. Fadi Shihabi, Partner for Sustainability Solutions Leader at KPMG, Dr. Morgan Eldred, Founder of Digital Energy, and Bashar Natour, Managing Director and Global Head of Islamic Finance at Fitch Ratings. So thanks so much, gentlemen, for joining us. Faisal, maybe I can go to you just to open up with a few thoughts of your own on this topic and how much of a challenge is getting the private and public sector, working really effectively together towards sustainable finance. Faisal, can you hear me? Yeah.
Yeah. Now I can.
Great.
Can you repeat, please? Thank you.
Yes, I was asking from your point of view, are we facing some serious challenges to the public and private sector working together towards, getting essentially better access to sustainable finance for those who need it?
I believe so. And there are some challenges around redefining the roles and the partnership between both the private and public sector, or what we hopefully will achieve and we call PPP 2.0. With the recent law that was published and circulated recently in the UAE, among other regulatory complexities and challenges that was or are coming in the pipeline. For example, the Federal Decree Law number 11 of 2024 on the reduction of climate change effects. Those are regulations and laws that expect the private sector in general to address certain priorities, including achieving net zero. Also, interlinkage between ESG and the SDGs are another challenge. To make things pragmatically operational and functioning, specifically from a financial sector perspective, definitely we need to talk openly about what are the key enablers for us to provide the highly needed required finance and facilities for the private sector or even the government in cases of project finance. With the current IBOR ecosystem, it's really challenging. With corporate profit tax rebate being introduced, we will have a higher probability of reducing risks and making such risk appetite for such critical initiatives and projects highly achievable. At the end, we are part of an ecosystem. We will need that ecosystem to be operating and functioning so we can participate and provide the highly needed finance.
Okay, thanks very much, Faisal, for that. Morgan, let me just go to you perhaps to start. I mean, I wanted to get on to the regulation question, and Faisal mentioned that at the beginning in terms of updates on some regulations that are happening here. You know, from your point of view, and of course, you're very much tied to providing digital solutions for projects, right, in the energy sector. Would you say that the regulatory framework is conducive for the private and public sector to work together on certain projects? I mean, driving sustainable finance towards those projects, things like, regulations on even carbon emissions and renewable energy targets. Do we see enough clarity there to encourage the private sector in, if you like?
There's a lot of stuff that's happening in isolation. I think from the regulatory aspect, it's how this is going to be integrated. So if we take an example, let's say, of smart green energy infrastructure. So if we get AI-driven solar-powered EVs, let's say we use that, we're using AI to optimize the energy use, the maintenance, and then let's say we use blockchain for somehow tracking the ESG metrics, the sustainability metrics, and the project metrics. So if we were to issue digital green bonds, for example, that would raise funding in this example, right? This would attract sustainable financing. So the current legislation will enable this. The challenge, of course, will be how do you operationalize it? Because the blockchain, the data privacy, the sharing of information, this is where I see that there are limitations when we, in this example, if we spend down where the execution is not necessarily as clear as the regulation is at the highest level.
Okay, thanks for that, Morgan. Bashar, welcome. Let me go to you. I mean, Morgan just mentioned green bonds, different types of, I suppose what we have out there is options for blended finance. I mean, from your point of view, just to look at it as generally as a potential challenge out there on sustainable finance, is there a gap in funding essentially? And you've got all the problems of large upfront costs for these particular types of investments. Obviously, private sector looks for faster returns, doesn't it, than the public sector? So, what are the financing mechanisms out there that are helping bridge that gap?
Thank you very much for having me. And I think you have, so for me, when I saw the topic that we're going to be discussing, I tried to simplify it from multi-dimensions. And I think we can sum it up in 4 dimensions. And then we can definitely, at least from my side, go from there. So the first dimension is definitely when we're talking about PPP. And in here, for me, I'm focusing on the GCC, but I cannot help it not compare it with the broader global aspect, in the 57 OIC countries and in the developed countries. So that is one. So what is the PPP standing point and what is the current framework? Secondly, and I think this is very important, where are we when it comes to sustainability and transition in terms of strategies, policies, and things on the ground? And that is the second dimension. And I think that is very important too. And here we have a fragmented story when you're talking about the GCC, let alone the broader picture. And the third dimension is, I think, relates to the question that you just posed, is the development of the financing in general in the region, and specifically talking about the capital markets, whether we're talking about equity, whether we're talking about bonds and sukuk and what have you, the syndication and financing and what have you. And the fourth dimension, which is specific to the region or in regions where you have Islamic finance, how is that developed in there? So you have 4 verticals, and each of them, as you correctly said, they have definitely potential and they have definitely challenges that is related to it. Looking at these, so for me, the available option is vast. The attainable options, I think, is the issue there. And here we are looking at a story that it is still at an early stages. So if I look at the 4 verticals, I would say I'll start just about the PPP and project financing. Historically, if we were having this discussion 5 years back, the financing and the funding would have been taken predominantly by the government. And if there is relevant aspect of it will be done by the banking sector. But that has changed in terms of not the way it's done, but in terms of the way that the governments are thinking. Now they are definitely going and pursuing diversification of funding. And that is a catalyst to develop this market. Now, if I want to talk about each one of these 4 in terms of the regulatory framework, I can zoom into that, but I thought that this is just an introduction. But if you want me to go ahead and continue and zoom in, happy to do that.
No, we can certainly come back to those, but just to stay with you on this, you said that, that they're available, the tools, right? Are they attainable? And are they, let me ask you, and sort of a follow-up to that, are they well understood, in the sense that do people know what's out there? Not just can they access them, but are they, well understood by the actors that would make, would make use of such tools?
I think capabilities and capacity building and creating a culture does not come easy. So the region and the players, whether on the simple retail guys or on the banker side guys, on the bigger, they are used to the idea of the government doing it. So you have to bear that in mind. So the culture that we have built throughout the decades, it's a government push when it comes to projects.
Yeah.
The change of mentality, and that's a very important point, is saying, okay, now we are open to public-private sector partnership. That's a different dimension. So you need to have the frameworks, but these frameworks, you have to bear in mind, they will continue to be frameworks until they are actually someone looks at it and said, well, this is bankable. I want to go ahead and do it. And then not only that, you will have few of these, and then you'll have track record. So I would say it's 4 stages. So the first stage is having the frameworks, the right frameworks for all 4 verticals. For PPP, I don't want to repeat them, but having these verticals tested, having track record, and then that will develop confidence or lack of confidence. But definitely not having the mentality to start with, okay, so we want to do this in a partnership. Now that will drive us to the question is this going to be bankable? Am I going to be profitable? Do we have the right balance in terms of risk and profit sharing? What is the mechanism that we can use? Is it Islamic? Is it conventional? Where the whole spectrum opens up. So your question, I think, is really key to opening up the market. You need to go there and say, the mentality has changed. We have developed some frameworks and we want to go ahead with that. It's not a press of a button. It is something that needs to be pursued and communicated.
Thanks, Bashar. Fadi, welcome again. Let's talk a bit about the aligning of the objectives of the private and public sector, particularly with regards to their risk appetite. Okay, I mean, the private sector has a much more conservative risk appetite. It wants its returns, we mentioned, sooner. Even also just in terms of the misalignment, perhaps, of the objectives of the two. The public sector is prioritizing sort of very openly the ESG goals of climate mitigation, etc. Private sector wants to take care of its shareholders, So how are we going to align those two objectives and ultimately attract the private sector more into sustainable finance? what would you identify as the sort of misaligned objectives that are still out there?
Yeah, thank you so much for having me today, and it's a pleasure to be with you all. In fact, if we look back at the sustainability mandate and regulations, we can see it's a global commitment coming from governments like Paris Agreement, United Nations Sustainable Development Goals, Net Zero Carbon. So those are national commitments, and to achieve these commitments, the governments cannot do everything, and they should not do everything. So how to do that better? It's actually to engage with public sector, private sector, and other sectors and investors coming from inside the country, outside the country. So as you said that there is kind of risk here, that's true. Public sector can actually afford more risk because they have better tools, better support from governments. While if we look at private sector, their main focus is on sustainable finance, their main focus on profitability. So now we need to redefine the relationship between public sector and private sector, while we can keep in the background the same objective of each sector. Nowadays, public sector is unlike before. They are not only facilitating, the services or solutions. They now started talking about profitability. We can see privatization also happening, PPP happening. So by this, taking the power of the public sector from easing licensing, easing tax, etc., all these regulations, supporting private sector to ease their mission to invest, to create the right platform, to invest in the right topics and avoid the bureaucracy that we used to have and to see in public sector. So we can see having the right instruments coming from public sector while we ensure the performance coming from private sector. This combination between public-private sector will definitely eliminate the risk between these two different agendas. So roles and responsibilities should be clear. This matrix should be well predefined based on the relationship. And we can see this happening through different modules that we have seen, different success stories. We can see also the quality of services that we used to get from public sector now has better quality because we have the private sector running the show and having better, stakeholder engagement. They listen better than because they can reach to everyone. It's a matter of profitability. And on the other side, public sector is also happy. They have the right profitability coming to them. This is the first thing that they started seeing. Also, not only coming about profitability, also the knowledge and upskilling their staff as well. So this combination between these two sectors will definitely support in getting less risk, better quality of service, and keeping this open for more investors to come. Through sustainable finance, we can see this one of the instruments to support the climate financing, let me say, biodiversity. Now we can see the events we have had in the region during the last 2 years from COP27, COP28. These events also supported the region to become more mature and also open the eyes for both sectors, public sector, private sector, to speak to each other and to create this PPP model. Thank you.
Thanks very much, Fadi. Morgan, just back to you on, a common question that comes up in a lot of these conversations is the expertise, the talent that it takes to sort of implement, sustainable finance solutions, to even have the expertise to seek it and, to see what fits where. I mean, would you say that's still, there's still a gap there, if you like, in this sort of towards ESG goals, the expertise gap of people who are qualified to identify, what can be matched with what more specifically? I mean, in your particular area of project work, if you like, how much of a challenge is that? Or have we caught up now in terms of having the right talent for these solutions?
Well, I don't think we have the right talent. I think if we look at, let's say, in the tech and the infrastructure, 10 years ago, we started getting data, doing that. Now, 10 years later, we're into an AI world and all of this. And nobody got it right 10 years ago. So how, if we've created a new paradigm, will we get that right? So definitely the capability is not there. I think one of the things when we talk about PPPs that's very, very important, though, is what's the risk allocation between the private sector and the public sector? And this really becomes important when we start looking at who's bringing the capabilities, right? Because if you're there, the private sector, you bring the capabilities, you want to build that up. If that risk and the roles and responsibilities is not matched, you may be taking on a major risk that the private sector is not, or is not necessary, or the public sector is not necessarily able to support and sustain that. And that can come down into things like permitting, bureaucracy, what's the service delivery that's tied to that? Is there any opposition that happens if you get into contract and legal disputes, right? And that all can stem operationally from not having the right capabilities that's there. And if there's a mismatch between the public and the private sector in this space.
Okay, thanks, Morgan. Ferdy, I just want to go back to you on that. I mean, we talked about risk, but I wanted to also touch on sort of how we measure the effectiveness, if you like, of any of these initiatives, the metrics and the impact, let's say, of these models. I mean, is it too early to start to do that? Are we still trying to figure out how to facilitate sustainable financing without worrying about, well, how effective is it being versus other types of finance? And you know, again, this whole question of greenwashing and how you assess things, you know, has it really been done above board? You know, how much of a challenge is that in terms of, and do we have the metrics to start measuring the oversight, if you like?
Yeah, actually, now if we look at, let me say, the financing in general and the low carbon economy, which we are now trying to achieve, and we look at KBIs and how we can ensure that the sustainable fund or sustainable finance fund has been used in the right way. So here, what we need is we are trying to actually elevate the knowledge of the financial institutions to better understand the sustainable finance, how to actually invest in and how to facilitate loans coming through the sustainable finance, what kind of KPIs they need to keep monitoring during the loan period, what kind of ESG risks they should consider in their process, as well as climate risk. Now we can see banks and financial institutions, they started thinking about their ESG risk matrix. It's there. I can tell you that in UAE, majority of banks under the Central Bank of UAE, they have clear now mandate, not only for greenhouse gases, but also for climate risk. They are assessing all their climate risk. They get mandate from the central bank to assess their top 20 exposures that they have from climate risk perspective. So all these regulations coming to help mitigating the risk, also mitigating the greenwashing point, which is very important point. At the end of the day, the sustainable finance has two ways: those who are willing to invest in green bonds, as well as projects coming to get financed by sustainable finance. And sustainable finance is not only what we think it's environmental impact. No, we need to look at the other sustainability pillars, for example, social impact, governance impact, etc. So how to ensure that we are ticking all boxes to ensure that this fund or this finance is sustainable finance and going to the right project. Here, banks and sustainable and financial institutions need to make sure that they have the right setup in place. And I can see this coming in the region. We can see during the last 2 to 3 years, majority of banks developed their internal frameworks, their internal checklists, etc. And they are monitoring also Scope 3 emissions, which is like more related to projects that they are financing. For example, under the Scope 3 BCAF category 15, they are now monitoring and started asking even their end users to report their emissions. So financial institutions started to put the right setup in place to ensure that low probability of greenwashing. We should not say no greenwashing because it is there, but with different levels. Sometimes it should be there with acceptable level, because at the end of the day, everyone trying to go to the media and say the good things about themselves, which is true and good to have. But at the end of the day, we need to have everything, reported properly and within the standards, regulations that we have in the country and in the region.
Thanks, Fadi. But Shireen, back to that. I mean, you have a global role, and you touched on the fact that we can look at the GCC or the Middle East or further afield. I mean, give us your take on, for example, we're talking about metrics, we're talking about transparency, best practice from other parts of the world where you would say it's being done right, and could the GCC be adopting a bit more of that? I mean, Europe, you could argue is quite advanced on the ESG front in terms of its as objectives, but maybe not on the finance side. So how would you, the regional comparisons, if you like, or lessons learned from elsewhere that you think could banks could be applying more here in the region?
Okay, I think that's a good question, but let me maybe put it also into perspective, because we are discussing, I mean, it's not only banks, first of all. Because when we're talking about project finance, I think we need to broaden the base and look at 4 key factors that will determine who is entering into the market, which includes banks. These 4 factors are, and I'm here talking about, I will bring the global perspective and then zoom in into the region. These 4 factors are: first, the risk appetite. Secondly, definitely the return. Thirdly, and this is very important, is the actual horizon, investment horizon. And here, banks is not on the best side when it comes to financing. And the fourth one that we're discussing is impact. Now, if we are talking about investment horizon and you're talking about PPP, usually they tend to be long-term. Banks by nature do not go for a long-term financing. So they will participate in a role, whether in the risk mitigation, whether in the bridge financing, whether in syndication or what have you. But we need to change that mindset when we're talking about PPP. So for me, you have to have these 4 factors in your mind when you're saying, so it's the risk appetite, reward, the investment horizon, and impact, which comes to sustainability. Now, if we're talking about the region, when I'm talking about risk appetite, there is an advantage in the region that is not in other regions, or in very few regions, which is Islamic finance. And when I say Islamic finance, why do I keep bringing that in the picture? Well, it's a significant part of the financing in the Middle East and the GCC. So Saudi Arabia bank financing, 85% of that is Islamic finance. Kuwait, 50% of the banking sector is Islamic finance. If you're looking at Bahrain, you're talking about 40%. If you're looking at the local picture, UAE and Qatar, between 28 to 30%. It's a significant part of that. And why is it important when we're talking about project finance? Islamic finance, by nature, has a profit and loss sharing mechanism on it. Not all of it, but part of the mandate is actually profit and loss sharing. That profit and loss sharing so far has not been uniquely utilized to actually go and finance project financing. And here I'm talking about the first vertical, which is risk appetite. Secondly, reward. That is something, I mean, I think we can spend hours of saying, do we have really bankable projects that allows different participants, not only banks? So if you're talking about the equity, if you're talking about the government, pension funds, investment funds, banks, bonds and sukuk and what have you, all of that needs to be assessed. And each of them have their own criteria. And that's very important. So the risk and reward is different. So for example, I'll give you an example from the sukuk side. So we rate around 91% of all global outstanding sukuk globally. And 99% of that is actually investment grade. So it's BBB minus and above. So it's an investment grade story. When you talk about a significant part of that, by the way, coming from the GCC, almost 45% of that is actually in the hard currencies coming from the GCC. So you have to bear in mind that there is something that is evolving, and it has been evolving in that sector. And I think we still saw a very strong years in how that's. So I think the bond and the sukuk market is contributing to I would say the first 2 vertical, which is risk and reward. And the third one, which is the risk appetite. The horizon continues to be a limiting factor. And when we're talking about the horizon, banks would tend to be 3, 5, 7 years, even when they're talking about bonds and sukuk. And project finance sometimes needs more than that. And on top of that, the risk appetite.
But Bashar, so what would it take to widen that horizon, if you like, or improve it? What's stopping us?
Yeah, so you need, exactly. So what's stopping it, you need to see what is the stakeholders currently. And you can separate that into 2 dimensions, local and international. The local stories in the Middle East continue to be bank driven. So you don't have deep pension funds, you don't have deep asset management, you don't have other type of investment. And I'm here talking about the region and the local. So the significant investors by nature is banks. So that is more chronicle, I would say, because that needs more of development of the debt capital market spectrum to develop it. If I'm looking at the international one, you have all of these. So all the types of investors they're there. The story of the Middle East and how the story of the Middle East appeal to the international investor is something else. Because we are early in the stage of development. There is no track record that gives comfort to the international investor to go and invest in the actual partnership side. Why? Because they don't know how they can enforce their rights. Why they don't know how they run? Because that was untested. So as you can see, what is lacking? How to solve that? There is a lot of things that need to be done. You need to develop the regulatory systems, the framework, which I think part of it has been already done. But after developing that, you will need to test it to build confidence. For the international investor, it has to be tested to allow them to say, yes, we were able to do that. We've really achieved our targets. We were able to enforce our right in distress or not. So regulatory systems and legal systems and court systems also need to support that angle. So what is needed is not something that I would say is a quick fix. It's an ecosystem that needs to be developed consciously and continuously to be appealing to the international investor and build the debt capital market and financing market story in the local and regional markets.
Thanks so much, Bashar. Well, it seems that we are in a pretty sort of immature stage then, in a sense, compared to other regions, and a lot of work to be done. And I'll go back to Faisal for some closing comments and maybe just what he thinks about that particular aspect from the banking sector side. But before that, Morgan, just one last sort of comment from you. You know, we've touched on a lot of the challenges here in terms of sustainable finance. It sounds like, you know, there's still a lot of work to be done for ultimately, you know, better solutions, if you like, or better mechanisms. But on the transparency, that's on project planning, and again, because you're quite involved in particularly solutions in actual projects. Have you, in your opinion, have you seen enough, if you like, coordination or transparency between the public and private sector on particular projects, in project execution and planning? Is there enough, if you like, upfront coordination on that in terms of how particular projects will be financed, or you know, is there a lack of trust? I mean, what would you identify as possibly a challenge on that front?
So I think when I look at it, typically the KPIs that we use on projects, they're very high level, right? So they're very high level, not necessarily that understood when we go detail, especially when we talk about large projects. And when we break that down, let's say the bankers will want something, the government will want something. You know, as a company, we also not just want to get paid, we want to deliver something. That's the benefit. And where I see a disconnection is what do we truly mean on those financial metrics, right? Cost overrun, budget shortfalls. How are we really looking at that? Are we looking at it on value of work done, which happens there? How is the financing coming when there's delay in projects that then make certain things unviable? Where does we rely on green financing or the complex financial instruments? And what I'm seeing is, of course, digital technology and of course, smart KPIs can help this. But I'm seeing in practice, typically we rush in, we use a standard set of KPIs we've always done, and we don't necessarily look at drilling down because the data is there and the data can be represented. But I think you kind of alluded to it, Yala. It's really all about at the set, taking that right time to really measure and get those measures right, and then ensuring that there is transparency between all parties in sharing. So the technology is there to enable it. The planning is very, very important. And then it's what are the KPIs? And it's not about the KPIs. It's when it comes down to we have to prioritize. Everybody has different opinions and different priorities. And I think that's where there's more work that needs to be done.
Thanks, Morgan. Well, thank you, gentlemen. Faisal, I'm going to go back to you to close for us, maybe with just a few of your thoughts on what's been said today. And I would ask you, my question to you finally would be, you know, what would be the biggest, what would be a strong incentive to spur more private sector involvement in sustainable finance from your point of view? You know, would it be, I don't know, tax incentives, or what would it be that you're on your number one list? And any thoughts on the sort of challenges that we've touched on, which is, you know, obviously risk, transparency, greenwashing, collaboration, speed, risk appetite. You know, what would you identify would be the key, the low-hanging fruit that you would say could be used now to push this forward?
Well, if we look at the guideline in India or the regulations that came in Oman or even the law in the UAE, they are all talking about net zero and setting the trajectory. Before it was a privilege or something to be proud of engaging or committing to. Now it's regulated and it's a mandate from the government. Why? Governments acknowledge that government alone cannot deliver net zero. They need the engagement of the private sector, and the footprint of the private sector is big. If we look at the emissions in the tourism industry, for example, it's more than 8% globally, and some of it is really challenging. There are opportunities if we look at water scarcity and water management, or energy transformation, or reducing other emissions by more afforestation. I wouldn't call it CSR, but I would call it carbon-based activities in a positive way into the community where we are operating. If we look at the carrot and the stick here, it's not the reputation damage anymore. It's not the greenwashing risk and the financial penalties at risk, but also the business model that we are operating on, and business as usual is evolving. Financial sector and insurance sector today are reviewing their engagement in certain sensitive sectors, including real estate. If there is no insurance provided for coastal or real estate located in afforestation projects or locations where there is wildfire risk, banks cannot provide mortgages. Banks cannot afford putting a high risk products in place. Therefore, it's not only retail banking, but also corporate banking. They need to redefine their engagement. Entities such as the UNGC, where Mashraq partnered with and organized an event at our innovation center where I am sitting today, is a critical component in providing the financial literacy needed. Today, financial literacy is not about a budget or paying tax on time or doing the proper books. It also involves doing environmental, social, and governance practices to ensure that we are abiding by those regulations and framework, and at the same time we are ready for the ecosystem complexity that is coming. Net zero, doing baselining, setting the trajectory of the objectives and the targets that we need to achieve by short-term 2030 or long-term 2045 or 2050. Engaging with such ecosystem require redefining how we are operating with the government. Government alone cannot achieve net zero, and therefore they are coming with the stick of the regulations and the laws. And at the same time, we cannot function and operate when there is a high probability risk on the table. Therefore, we need to engage in an open dialogue and talking openly about not only tax deduction and tax rebate and rewards, but we need to put that there are certain risks associated. We need to work with the government on reducing them, so our risk appetite will increase, our willingness to engage is there, with us committing 1 trillion dirham in the financial sector in the UAE from 6 banks only. There is more to come. My expectation is we have more than 79 financial institutions or more in the UAE alone. 1 trillion coming from 6 financial institutions and banks means there are more trillions to come on the table. But to bring those money on the table and to make sustainable finance and green finance specifically more appealing for us and to the obligor, we need to redefine the rules of the game, and we need different engagement from the government to set the trajectory. The theme of COP29 is sustainable finance. Well, everything is dependent on finance. If the finance is not there and it's not affordable and it's not incentivized, then definitely we will have an issue with providing the money needed to achieve the objectives, whether it's sustainable development goals or net zero specifically.
Thank you so much, Faisal. For that, as you said, we've got COP29 literally coming up next month in Baku, and finance is the sort of, I suppose, the headline of that meeting, as it is really discussed in every COP meeting, isn't it? But as you said, that Mashreq and other banks came forward at the last COP and offered that trillion and much more there to capitalize on, hopefully. Well, thank you so much, gentlemen. We've run out of time for this dialogue. I'd like to thank Mashreq and Faisal, and also Fadi and Morgan and Bashar for joining us today for the dialogues. Have a great remainder of the week, everybody. Thanks so much, everyone, for
Thank
joining
you.
us as well, to our
Thank you.
viewers. Thank you.
Thank
Thank
you.
you.